we cannot discount the fact that these stocks at the moment have been significantly inflated by AI companies and AI startups. Now, regardless of the fact if the AI companies actually manage to make it past the first year or two of operation, it still is predominantly down to AI. So if we go back in time and we look at the sort of forefront of the AI boom, which was really towards like the beginning of 2020. Good morning, ladies and gentlemen, and welcome to today's Markets Now session. It's currently 9:15 on the 7th of November so far. It's dark and gloomy outside, but we have a continuation in our natural gas long, which is great news. We are currently trading at a plus 8.55, so yeah, it's going extremely well at the moment. Really happy with the progress on this one. We've managed it out very well all week. Next week is the expected cold snap in the United States. So hoping the weather forecasts stay true to that fact as we see the demand soar for natural gas, and we should realistically look for the potential of probably a double the move that we've seen so far. Which would be obviously a great return. But look, I think as far as we're considered, as far as this is considered this week, it's been a really impressive start to the position. It was a really nice call, beautiful breaker structure. Everything about it's been really good so far. We have had some relatively choppy moves, but we have to stay pretty firm to our trading plan, as natural gas can historically have its quite, I would say, exaggerated moves is the right term to use for this. We've got, the normal kind of impulse corrective waves can be quite extreme in natural gas, unlike other trading assets. But yeah, I mean, so far it's been very good. I mean, in terms of net return, we are currently at around, let's have a quick look here. So we're currently at around 2.2% up on this one. So yeah, it's a big position. It's a very big position. Yeah, it's a really big position. It's going incredibly well. I don't really have anything more to add to that at the moment. The fundamentals are on side for this one. There's no reason to get out. We've got a really nice bit of room to breathe. The CSL is currently at 366. I would probably anticipate, dependent on where we end up at the end of the day, I would probably anticipate removing this CSL, maybe putting that down just a bit further, maybe down to around 360. To allow a little bit more breathing room over the weekend to account for any weekend gaps or anything like that. I mean, look, at the end of the day, the very worst case scenario is we're coming away with a 1 to 4.71, which is exceptional and is an exceptional trade in its own right. Obviously, we want the big one, but we don't want to be losing our risk down at 324 either, because that's where the real key money is made from that early entry. So, yeah, so far so good in NG, looking really good. Hopefully that continues. Now, let's take a quick pan over at the NAS 100. So the NAS 100 actually lost a lot of its gains, its early week gains. We had the Tuesday, Wednesday move up to the high. We've actually given away all of that and some extra. We're currently trading at 25.23. And this comes off of the back of the AI bubble fears that is becoming a little bit more mainstream now. I've been talking about this for a few weeks now, as you guys know. But it is, as I said, as something like this, as an idea like this becomes more mainstream, market sentiment really does begin to be shifted and reactive to that kind of news. And at this stage, we're seeing the real life consequences of that. Now, I have to be honest, I am still not sold completely on the fact that that is what is shaping the sentiment at the moment with these US indices, or with any of the stocks for that matter. I mean, even the DAX has lost quite a chunk, but it's definitely playing a part. That's what I would say. Now, there are some major leveraging factors that the AI industry has. I mean, if they beat the development wall and we start to see the next wave of development in artificial intelligence, we're not just looking anymore at large language models, but we are touching the surface of conscious AI. For example, a self-thinking machine. Scary, I know, but there we go. Then, of course, we are going to see gains of like the likes of which we haven't seen for a hell of a long time. I'm serious. You know, we will be in one of the biggest bull market cycles that we could have ever seen. We would have ever seen in history if that takes place. So there's a lot on the line, but we cannot discount the fact that these stocks at the moment have been significantly inflated by AI companies and AI startups. Now, regardless of the fact if the AI companies actually manage to make it past the first year or two of operation, it still is predominantly down to AI. So if we go back in time and we look at the sort of forefront of the AI boom, which was really towards like the beginning of that low right there, that's when ChatGPT was released, that low. ChatGPT was released then, and this is where we're at now. That's 141% gains since AI's been out there. But what has AI actually achieved? You know, really, okay, we've got something that we can fire in messages to and it gives you a response. The data is very often lacking. It's very often incorrect. Sorry, I don't know why I said miscorrect. It's very often incorrect. You have to constantly fact check everything. It's really good for creating templates or Excel spreadsheets that you can, you know, put stuff in. It fires back bits and bobs of information that can be utilized so long as you do your due diligence, and then it takes you just as much time doing the due diligence as it would be to create it yourself. It's very good for basic tasks, you know, very, very basic tasks. And I'm not putting it down. I'm not putting it down or anything. It's an amazing achievement, don't get me wrong. But if we think about it, I would say 95% of AI startups are using one of 3 major AI models. So nothing's original. It's all the same company. It's all the same AI in the background. So how on God's earth did we get to 141% growth over the course of a few years? Since AI has been around, you know, and this is crazy. This is a crazy growth cycle. So I think when this bubble goes, and it will, all bubbles come to an end. It's just a matter of time. We'll be looking at something like this, shaving off all of the inflated gains, and we'll be coming back down to continue the bullish trend from around 1685. That would be, and I know this is an incredibly bold call. I do understand that. I do appreciate that. But that is honestly what I would be looking at. Your first point of call is, of course, going to be here. So that's your first point of call down there, around 2250. Then we get the breakdown below this one. We'll be going all the way back down to around 1726 to 1680. And that's what I would anticipate. S&P 500, which is made up of what, 48% tech stocks now as a result of the AI boom. We go back to when ChatGPT was released on this bad boy. That's down here at this low in here, right spot on. Right to this point in time, the S&P's gained 92.35%. Again, we'll be looking just the same as the NAS 100. We'll be looking at a loss in the NAS 100 once the inflated gains are shaved off, probably looking back down at around 5k. Yeah, monumental loss. And there will be a lot of people burned incredibly by this. But it's not, it's, you know, I don't want to say this like it's doom and gloom, because it's not doom and gloom. What this does do is it gives new investors the opportunity to reinvest at a much better price. So if you missed the first run, this is going to give us a really good opportunity to start buying back into index funds again and ride the rally back up to the previous high. I mean, by the time we reach the previous high, we've done a good job already. So there's a lot of interesting things on the horizon. Definitely, you know, it's all about timing as always. But I mean, we're going to have a pretty significant amount of time to make a decision on this one when it does finally start to go. I mean, at the moment, this is nothing more than really a quite predominant price action pullback, isn't it? You know, it's nothing major. I would nowhere near bear market territory. Absolutely nowhere near bear market territory yet. It's just been a big losing week. So it's going to be an interesting one to see where the market lands. I would say, as I think I said a couple of weeks back, maybe a week and a half ago, that I would be looking for a beginning of Q2 sort of timeline for this before things start to really get rocky. And I'm just going to stick to that for now. Obviously, things change. Your biases need to change. Your outlooks need to change. But right now, I'm going to stick to that. And I do think that's when we're going to start to find out a little bit more information about what's going on behind the scenes and how it's going to affect our markets. So that's really that. So in other news, obviously we've covered natural gas, which is doing obviously really well at the moment. Next week is the forecasted cold snap, so hoping we're going to get a bit of a sort of a stage 2 demand vacuum. Obviously, this high is the real big one. So if we can break above that at 410, then that's going to really pave the way for that move up to 444. By that point in time, just to put things into perspective, we'll be looking at around a 1 to 15.74, which is going to be doubling our return of around 2%. So by this time, we'll be looking at maybe 4.5 to 5% net return, which would be incredible. And then by the time we get there, we're probably looking at about a 7% return, and that's going to be a 1 to 20.43. So which is the ultimate goal. But again, we're not really going to realistically see that kind of value if we ever get there within this projected timeline. That's probably not going to be coming into play until maybe mid-February, March. And we've got a lot of weather forecast to get through up until that point. We could have a milder, deeper winter in the US. We don't know what that looks like. We could also see an incredibly big increase in natural gas production, which drives down the demand, increases the supply. Therefore, we get the reduction in the NG asset value there. So there's still a lot of moving factors. We can't just say, oh, this is a clear winner. Still a lot of moving parts to it at the moment, but as I mentioned, going really well. In terms of the rest of our trading this week, it's been really itsy bitsy. We're up overall. I don't know offhand exactly what we are on at the moment. I will have that information ready and polished for you in the end of week trading report later on this afternoon, so you can stay tuned for that, alongside the American market opportunities as well. But it has been a bit itsy bitsy. FX space has been really flaky. We've had, I think, maybe 2 solid wins, and the rest of it's been either non-triggerers or losses. So yeah, not very good, to be fair, unfortunately. And yes, that's about it, to be honest. Yeah, that's about it, really. The European indices have been really flaky as well. Gold has not actually gone anywhere at all this week. It's just kind of flitted between these 2 points and not even hit the low or the high yet, which was quite frustrating. So hopefully next week is going to be a little bit better for us, and we're just going to have to leave things there. You know, that's where it is. That's where the markets are at the moment. I mean, there is. I mean, the issue is, guys, of course, we're heading further into winter, right? I mean, it's only mid-December, and I'm going to cut trading activity. That'll be it, mid-December, and then we have a month off. Not from the trading room, of course. The sessions will still be going, but it's a much more relaxed scene around Christmas time. Lots of drinking Baileys and stuff like that, which would be nice. But yeah, so we'll have to see what we can do leading up to Christmas time, and yeah, probably going to be taking foot off the gas. I mean, we've really been driving these trades forwards at the excuse me, we've really been driving these trades forwards at the moment, haven't we? And trying to really, fine tune positions where we can and just pick up what we can. But ultimately, if it's not there, it's not there. And we just need to be, I'm going to say it again, we've got to be patient. So I'll wrap things up there anyway, team. We are currently at 9:33 a.m. I will be back this afternoon to post out the full written reviews of the US indices, see if we can grab a couple of extra wins before the week ties up. And then I will also conclude the week with the end of week trading performance reports. And we'll go from there. If I don't speak to you guys before Monday, then I wish you all a wicked weekend. Have a good couple of days away, doing what you're going to do, and I look forward to catching up with you on Monday morning. So take care, guys, and I'll see you then. Thanks a lot. Bye bye.